The people who own this at the moment, do they work in the business? Are they operating the campsite?
Partly. There are some health issues.
So. I think, going on from the other guys, I think...
Property Elevator is back and we are bigger than ever. This year, we see our angels looking to invest their hard-earned cash into some of the best property deals on the market. Will our angels be keeping their lights green, or will they be turning them red? And to shake things up, I'd like to introduce you to the lender, who'll be giving their insights into how these deals could potentially be viewed from a lending perspective. Our angels are seasoned developers, mentors, and investors with a combined experience of over 100 years. They are Paul Mahoney, Ranjan Bhattacharya, John Howard, Hayley Andrews, and Nicholas Walworth. Unlike the angels, our lender, Scott Marshall, can't shake hands on any of the deals. So, it's up to our candidates to impress one of the 5 angels for that all-important guidance and cash. So, let's meet some of the hopeful candidates pitching their deals on today's show.
Naomi, welcome to Property Elevator.
Thank you.
You're flying the flag for females in the industry today. Tell me...
Trying.
Yeah. What made you want to get into property in the first place?
I have most of my life worked for the NHS.
Okay.
And I got to a point in my career where I felt like I needed more time, financial freedom. So with my business partner, not for this particular deal, we set up a property company in 2019.
Yep.
And I've been doing property full time for the last 3 years now.
Brilliant. Well, I'm sure they're going to love you up there.
Thank you.
Best of luck.
Thank you.
I'm going to send you up the stairs now.
Okay.
See you when you get down.
Thanks very much. Hello, angels. My name's Naomi. I am one half of a business partnership with my colleague Jeannie, who sends her love. She's skiing at the moment, so it's just me presenting to you today. And we're both really grateful actually for your time and the opportunity to present to you. So we've had the offer accepted on a 5.5 acre plot of land, which is in the South Cotswolds. It's near an area called Stroud and Painswick, and that's in an area of outstanding natural beauty. It is already a campsite. It's been with the vendors in their family for a number of years. So as I said, we've had the offer accepted, and that's on a purchase price of $875,000. We estimate the cost to redevelop the existing lodges, which are very sweet, but not quite at the level we would want them to be at, and the new lodges at $500,000. Total costs of the site is $1.5 million, so that takes into account additional planning fees, professional fees, legal. So what we are looking for is a $400,000 initial investment. We would want to be in a position when we refinance and we hit the GDV we're aiming for in year 3 for that money to be returned to you. The return for that is 12% per annum in years 1 and 2, as well as a 30% ownership in the business, so that would be the profits as well. And when we repay the $400,000 in year 3, to continue a 30% ownership for 5 years. This would be the start of 1 moving to 2, 3, 4, and maybe more sites over the next few years. So a JV partner to help us move that business forward and work with us. So thank you very much for your time, and questions to you.
Thank you very much indeed.
Thank you.
Let me just say where I am now. Initially, it's not something that I would normally invest in. There are other people, other angels, I should say, who are far better placed than me. So this one is not for me.
Okay, thank you for your time though.
Can I ask you about, because what I understand is you're asking for $400K investment, and then there's an ongoing stake in the business.
Yes.
Can you just run through the turnover and the profit that you're expecting in year 1, 2, 3, so I can get an idea of the scale
Sure.
of that business?
So 450,000
450 total.
Yeah,
Yeah, okay.
with a net monthly profit of 7,000, which is about 80.
Annual, so it's just times 12.
Oh, annual,
okay.
84,000
Okay.
off the top of my head.
And year 2 and all of that?
685,000 turnover with a monthly of 19, which I think is about 224,000 annual.
Okay. And the idea of paying back the investor after 2 years, that money would come from where?
So from refinancing it, so realistically we will have to trade for the 2 years to, as I understand it, with commercial financing.
So you'll be looking for basically 2 years trading profits in that business
Yes.
as the route to refinance?
Correct, yes.
Okay.
Are you struggling to find your next commercial to residential conversion project? Well, over the next 2 years, virtually every UK bank branch will close. Banks are fabulous buildings in prime locations, and thanks to permitted development rights, they're really easy to convert to alternative uses under a light touch planning regime. My team have put together a list of over 500 UK bank branches which are poised for imminent closure. And for a limited period only, you can download this list absolutely free. Your next commercial property project is on this list, so download it now and enjoy the rest of the video.
So you want us to tie our money up for a period of 3 years?
Realistic, I suppose,
Yeah.
yes. It would not be at the end of year 2, beginning of year 3. We would more than likely have to take it through to year 3, which therefore we'd adjust the percentage return.
That's great. So in terms of your occupancy levels, you've worked out your revenue based off 60% occupancy.
65%.
65.
In the first few years, moving to 80.
Okay. Have you taken into kind of seasonal trends or?
So yes, not in the tables you've got. So behind that, when I've profiled it, it kind of comes out to around the average nightly rate of 220. So we fully expect that obviously in the cooler months it's going to be less. We would be expecting a lot more obviously in the summer months and the prime months. So it does balance out.
Yeah.
Paul? Yeah, I've got a couple of questions. Is it fair to say that with this type of business, the valuation is hugely dependent on how well the business is run?
100%, yes.
As in, the bricks and mortar valuation of this site is going to be substantially less than the business valuation overall, right?
I would say yes. It's currently had a valuation. It is on bricks and mortar at the 875 that we're offering for it. We've spoken to the agent and shared the plans. This is the agent that's selling it. Shared our plans of what we want to do. He has suggested that the GDV I've put in the figures there, which is 2.1. Is achievable. It is very finger in the air, of course, because yes, it will be, as you say, dependent on how we operate the business and those profit margins that we achieve.
Fair enough. Yeah, I think for those reasons, it's not really one for me, just because it seems this is kind of the first side of this scale you've done, and therefore the potential of us getting our money back in 2 or 3 years or 4 years, or whenever it happens, is all based upon how well this is run.
Yeah.
So that adds an extra layer of risk, in my view.
Thank you for your time.
Nicholas?
I mean, I love it. I used to own a yurt, and I've got an orchard in my new property, and I'm going to build my own.
What a surprise.
Glamping.
What a surprise. What a surprise.
So although I don't live
I'll
close,
come on that.
yeah, you can come and run that for me for sure. You know, let's hope this pitch has a happy ending to it. But at the very least, what can I ask you? I mean, I've got so many questions. I'm going to get told off for going on so long. So I'm trying to pick the best 2 or 3 to ask.
Start with one, eh?
Please don't.
I'm concerned, actually. I'll start with the concerns, let's be honest. I love the model. 500 grand to spend on a few huts and refurbishing a few huts. Wow, it's far too much. I mean, these will be, to lead on from Paul's suggestion there, these will be depreciating assets on your business. They're not houses. They're going to be of a build quality where there'll be a depreciating asset, I imagine. So that's a big
good point.
capital investment that's losing money in the same way caravans and static caravans do. So that's a concern of the big upfront cost. And unfortunately, the way you've pitched the investment, firstly, I don't like the fact you're going to pay us 12% a year, because that's going to come out of your profit. I want your business to succeed. I don't want to take money from it from day 1 and day 2. And I also want to own 30% for the rest of my life. I want to put in my effort up front and have the benefits for a lot longer as a business partner. I don't like doing short-term deals. So the investment doesn't work, I'm afraid, for me. So I won't be investing. Thank you. Good luck.
Okay, thank you.
Scott.
Yeah, like Nicholas, I've got quite a few questions, so I'll try and keep it brief if I can. So question number one, your purchase price is 875.
Yes.
Call it 900.
Yep.
Okay. And you are asking for £400,000 of cash.
Yes.
Today. So the 400 you're asking for plus the 100 you're putting in is 500.
Yeah.
There's a £400,000 shortfall against the £900,000 purchase price. Where's that coming from?
So we would need to raise funding as well, commercial lending as well.
It's called a bank loan.
Okay, so you're looking for a loan for the funds.
yeah, one of
okay.
those.
Yes, sorry.
Right. Okay. In terms of this being a lendable project, Nicholas is right in that you've got depreciating assets that are on there at the moment.
Yeah.
They need to be sweated, and you've got new assets that are going to go in and are going to fall over time. This is much more of a bankable deal to be funded through a bank effectively.
You mean a clearing
once you're
bank?
trading,
You mean a clearing bank?
once you are trading as a business,
Yeah.
and it is the getting there and getting 3 years worth of solid management accounts generating profit that's going to give you the banking facility for the long term. Obviously from a development perspective, this is not so much attractive to a development finance lender, a bridging lender.
Scott, I think that's
Yes and no.
Well, I think that's
It's a minefield.
it may not be too positive, but I think it's really good information that you've
Well, you
given.
need to know, yeah.
Yeah, Hayley.
I love you. I think you're fantastic. I love that you're a research geek like me, and other than your operational expenses, I think you bang on with your numbers. I would have the same concern as Scott and the other guys, is what do we have security over right now? Yeah. You are buying it at market value at 875, so I think for this to really work, we need to drive that price down. You don't have many people out there that are competing for this type of deal. It's a niche market. You are offering the experience. It's more about, I think I saw something in there about sensory experience and things like that. It is a very niche market, and that's great because you have a unique selling point. But that is also hard to then kind of compare or value.
Yeah.
Are you investing or not, Hayley?
I can't make you an offer today, but my offer would be to actually sit down and really look at this in detail to see if there is something here
forward.
for us to work together in the future.
Okay.
That would be great. Thank you very much.
Can I give you one tiny bit of advice before Ranjan tells you where he is? You might be better going and finding a plot of land for 10 grand an acre in a lovely area and building this business yourself, because I think you add all the value. And I think you touched upon this, you're paying full market price for a business that probably isn't making much money anyway, so you're overpaying for it at the current price.
But it has got a good planning permission.
But it does have good planning permission. That's what you're buying. You're buying the planning permission.
Ranjan, you're the last person in.
The people who own this at the moment, do they work in the business? Are they operating the campsite?
Partly. There are some health issues.
So. I think going on from the other guys, I think you've presented this. I think you're great, but I think you've presented this in a maybe if it was bulldoze the lot and secure it on an option and build some houses on it. That would be a fantastic thing.
Brutal developer is Ranjan.
But
no wellness retreat.
Then it's not glamping, is it?
I've spent quite a bit of my career buying commercial properties and who are owner-occupier businesses, and they start off trying to sell the business, and then they realise that the business doesn't have the value because they're working in it, and the minute they take themselves out of it, it doesn't matter that they've been going for 20 years, it's not worth that. And then it's just the land value and the building value that you're paying for. And you're not at that level with this purchase price. So if you are going to go back, take Hayley's offer of the coffee and a chat and drive down that price.
Thank you.
So I'm afraid you haven't got a deal today, but there's a maybe. My quick advice would be it needs to be half the price they want for it.
Okay.
So good luck.
Thank you.
Thank you for coming in.
Thank you all very much.
Done.
Thank you.
Thank you.
Well done.
I thought she was great.
What an intelligent,
Yeah,
you know, on
brilliant.
the ball,
Brilliant.
someone you could really invest.
I loved her.
Invest
Yeah.
in.
She's really, really backable.
If she had a plot of land at the end that she was confident had planning permission, had a pre-application or a planning consultant's view that you get a couple of houses on that, it might have worked from our
Yeah,
perspective. We could have
it's
taken
all
the risk
about-
on the business.
It's all about how they come in
Yeah.
and propose the deal.
So Naomi, no deal today, but lots of feedback, and in particular, Hayley said some great things to you.
Yeah, actually they all did. First few seconds was very nervous and then got into it. So actually it was a great experience.
Yeah.
Amazing feedback. Certainly some things that I hadn't considered. So that's really helpful to kind of how we move the site forward, the proposal forward.
Brilliant.
So as far as I'm concerned, it was a success. So I'm
Great.
very happy.
Oh, definitely a worthwhile day then.
Yeah, absolutely. So thank you.
You're very welcome. It's been a pleasure.
The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.